Hey everyone, welcome to Kenny's Clip. A lot going on that I want to update everyone on. First, we'll start with real estate. So the market continues to struggle along, low transactions, prices softening, particularly in the South and West and here in Colorado. And that will continue. And I expect we will, with increasing foreclosures that will start to happen late this year. I mean, it's already happening. It's up 30%, but that's over a very low base. So that's going to continue as the workouts that have been stopped as of last fall continue to work into the economy and have an increasing effect on the low end and inventory, which will be great because hopefully lower prices will drive more transactions. So unfortunately, what's happening now is people are unlisting their houses or delisting their houses, as some have called rage delisting, because they're not getting the house sold, and that's an indication of sellers' denial of the actual drop in prices. And we have a shortage of buyers. And why do we have a shortage of buyers? Well, we've got a war that's making people nervous. But more importantly, we have interest rates at 6.6%. After the meatball in charge, Jerome Powell, drove interest rates to 2 or 3%, and that traps people from wanting to move with those record low interest rates and payments. So now we drove up prices by doing that, and the young people in the country can't afford housing in most of the United States because of the high house price appreciation. So that will continue to soften in the South and West, and likely slow down in the Midwest and the Northeast as inventory gradually increases there as well. But anyway, low number of transactions. We're still in the 4 million a year, which is very low, and we're struggling along here with that. The other thing that's going on is the battle between Zillow and Compass Real Estate continues. Compass Real Estate is trying to maintain two sides of transactions by when they take on a listing, they're trying to privately list it within Compass only, so that they're claiming it's for exclusivity and to make it special. But really what that does is get a seller less buyers, which I don't know what seller would want to have less people looking at their houses, unless they're a celebrity or something like that. So I know a lot of great Compass agents, but not a fan of Compass CEO and the way he describes that this is a benefit to sellers, because no one in their right mind would really want to have less people look at their houses, because the more people you have, the more offers you could get and the higher price you could get. So let's get back to reality, Mr. CEO of Compass, and continue your battle with the states, because now the states are Connecticut just said that if you privately list things, you can't do that. And so there's two other states looking at that. So their battle with Zillow, and what Zillow's doing is saying, if you do privately list it, then we won't put your listing on our site after the 2 weeks or 4 weeks of private listing. So quite a battle going on. And the ultimately in the public interest, the data out there and the listings should be available to everyone, and not just the real estate agents that are trying to only list it to their real estate agents. So, like I said, once again, I know and have a lot of great real estate relationships that, with Compass agents, but I don't believe they're just trying to get both sides of the transaction. So if you list the house and another Compass agent finds the listing and shows it to their client, then Compass gets a piece of the action on both sides of the listing and the buying side. So that's the motivation, but ultimately Zillow and the states are fighting it. So that will continue. Anyway, moving on to the financial markets. So what's going on there? It's a bifurcation. Crazy what's going on. We have a boom in AI production, manufacturing, of the building of the AI data centers. We have shortage of chips, so chips are skyrocketing in value. We have a huge stock market boom. We are in the bubble phase. How long this bubble will last, I don't know. But we are in a bubble phase, and that doesn't mean that the stocks couldn't go up 20, 30, 40% in the next 2 years. We could be in 1998 and still have a couple years left. So as you know, I do make some I let you know what's going on with my trading indicators, and we're still 100% in our stock allocation, and that's great. Gold is down to zero, and Bitcoin's down to zero. So whatever your allocations are, that's and the Bitcoin turn that I indicated to sell out of the Bitcoin certainly was prescient because that was in the 75 to 80,000 range, and or thereabouts, and now we're down to the low 60s. So good to get out of that when you can. So anyway, these are systems that are not trading systems. These are investment systems that are designed to take out the left tail risk so that your a retirement portfolio, which is what I'm working with, will not drop 30, 40, 50%. So I'm trying to eliminate that huge potential drop. And we might miss the top, we might miss the bottom, but we're going to capture the biggest parts of the gains and eliminate the worst parts of the sales. And so that's what I do. And this is not investment advice, but that's what I think is a great way to look at things. So right now, because the Strait of Hormuz is still closed and the war is still going on, and we are so close to a deal for a month or two now, but that is keeping oil prices high, which is keeping interest rates high. And that's because governments across the world are having to sell treasuries to pay for oil and also sell gold. And so that's why gold is no longer in a positive uptrend. So that will change, I believe. It will change once we get this Strait of Hormuz things fixed. This problem, I've said the end of May was a deadline. Well, it turns out we've done a lot to make it so. We're draining down our reserves dramatically. We're releasing 1.5 million barrels a day from our strategic petroleum reserve. The tanks across the United States and across the world are dropping in inventory. And Chevron and the Exxon CEO have warned about July and late July, what happens if the strait's not opened, that oil prices could go from $90 or $100 a barrel to 150 to 175. So that would be really bad for the economy. That would be, although it's, remember, oil is a smaller percentage, and with inflation, the prices we're paying are really not as bad as it may feel when you pay $100 to fill up your car, but or 150 to fill up your truck. So anyway, it is likely to, if it's not fixed, to lead to much worse oil prices and potentially a stock market correction of substantial nature. But while this boom is going on, the economy is showing signs. The ISM Services Index, a lot of the ISM reports, which are service and manufacturing, are showing an increase in activity and a decrease in job losses. So that's good. The various reports then have been positive. Tomorrow, we'll see how the job reports are. We know that the first round of the report is usually useless. And so we'll look at what last month was revised to. And so that'll be interesting to see how the economy is doing there. But tech companies are still continuing to lay off people, but the economy is starting to show some signs with all the building and all the activity when it comes to AI and the productivity that AI is going to add. We could have a much stronger economy than many think. And so the only big risk I see is the effect of oil and the shortage on dollars that causes, and that can cause some liquidity problems across the financial markets if this continues on for months after months. So although the world economies are incredibly resilient, we have been producing massive amounts of jet fuel to help Europe get through the jet fuel shortage. But that's creating a shortage of gasoline in the United States that could hit us in another month or two. So it is very interesting how the economies adapt. We're producing, we're getting more from Venezuela. We're producing more. We're at record outputs, exports from the United States throughout the world. Japan's coming here to get oil from us. But there's a limit to how much is out there. We're losing probably between. The numbers are between 5 and 10 million barrels a day because of the closure of the Strait of Hormuz. People say, well, it's 20 million. Well, it is, but we've figured out other ways, like Saudi Arabia's got a pipeline that they're using, which is 7 million barrels a day. So anyway, there's workarounds. Those workarounds are working, but they're running out because that inventory that we've been drawing down for the last few months is continuing to get closer and closer to the bottom of the tank. And once that hits and there's no more reserves, then we could have prices driven up exponentially. And what that can do is cause demand destruction, which will potentially it could lead to a recession. It could cause other dislocations, like I said, in financial parts of the economy. We do see that private equity and private credit are struggling. There's been Cliffwater just had a 17% request for their money back in this multi-billion-dollar fund, and they can only give 5% back. So people are asking for their money, but only a third of them are actually getting it. Blackstone just had the similar request, and a big company in Switzerland just had a private equity company requesting 10% of their money back. The investors in this private equity company, it's not private credit, this is private equity. And that's worse than private credit when it comes to the effects in the markets. And they had requested 9.5%, and they're only giving 5% back. So this is causing some fear in the market, and this could continue to cause a problem. And once there's a liquidity crunch, this, potentially from oil or whatever, this could exacerbate the issues with the private equity and private credit. But right now, the AI boom is overriding all that, and we are definitely in a stock market bubble, and that's why we follow the bubble when we can, and we try to minimize the left tail risk for when things start to fall apart. So I'll keep you updated. That's kind of a quick update, a long update on what's going on. Very, very bifurcated. The economy struggling with the private credit, private equity, oil prices, all that, and mortgages, and the real estate industry is really hurting with the number of transactions so low. That's hurting Lowe's, that's hurting Home Depot, et cetera. We're seeing Walmart sales. The low end of the economy is really struggling with these oil prices. Meanwhile, stocks are at record highs, which helps the wealthy and helps keep the economy going because the wealthy and the spending is still going on, although people are drawing down their savings and they're using more credit, and there's more defaults on auto loans and all that. So really a split economy, like you hear about the K economy, that's real. And so is the stock market off to the races. So whether it could hit 8,000, 9,000, one never knows. And when, we don't know. I do know that the longer the Strait of Hormuz goes on, the more likely we are to have a pullback, that it could be substantial if we have dislocations as a result of that, with this, a massive surge in oil prices. So I'll keep you updated, and any changes in my allocations, I will let you know. So I hope everyone has a great week. Take care.